Hey guys, how's it going? Welcome to the daily recap for Tuesday, the 15th of March 2022. So, higher time frame is getting a little bit messy on the 4-hour chart, but quick reminder, right? We're coming off this extreme weekly demand zone, which is inside a monthly demand zone, and we've also mitigated an extreme daily demand zone within there, right? So, we're expecting potentially we could see a decent higher time frame reaction. Is this going to work for me? Oh no. There we go, cool. A decent higher time frame reaction from this level, at least a deeper sort of daily pullback, right? We're clearly bearish pretty much on all time frames. We did initially have a very strong reaction. We came up and mitigated the price supply range, right? So now we could be ready to go on and take out this weak low, or we may see a bit more of a complex pullback up into premium supply. But very simply, we expect this low to go. Yes, we are currently within this daily zone here, which just disappeared, those sets by wicks, but it's a very insignificant zone. Obviously, it didn't break any structure at all here in the daily chart, so it's not really something I'm personally paying attention to. But yeah, very simply expect this low to go, but there is a possibility we could get a bit more of a complex, deeper pullback. So on the 4-hour chart, as I've said quite a few times, I'm not in love with classifying this necessarily as a swing pullback compared to, the overall volatility. I know some people have their actual 4-hour swing structure like this, and other people are a bit more aggressive and they viewed that as a swing pullback, right? So then you would switch bullish. It doesn't massively matter, just try to be consistent with the way that you're doing it. After we got that initial break of structure there, this was more than an 80 pip pullback, and then we kind of had one big movement down. So I'm personally viewing that as the current swing range we are within. We then mitigated that extreme supply range, had our bearish change of character here, right? Because this low took the high, so price went up and then took out the low. So then we had a bearish change of character there on the 4-hour chart, which now means that the 4-hour pullback may now be over. Right, and we're now ready to take out this weak 4-hour low. Why is this a weak 4-hour low? It's weak because it failed to take out the strong high. So now that we've kind of done its job, we've had the pullback. In theory, we should be now ready to take out that low. But of course, it doesn't always happen in just one nice straight movement, right? We can have some pullbacks down on the way and it can get a little bit choppy and range bound. Or like I said, there is that small possibility that we could switch bullish on the 4-hour chart to have that deeper daily and weekly pullback. But reminder to myself, I have to remind myself every single day, don't get too fancy with your forecast. Keep it very, very simple. We have pulled back to premium supply. We're now potentially ready to take out that weak low. So, those shorts, those pro trend shorts targeting that weak low are always going to be the easiest trade and the simple and highest probability framework to follow. Now you can obviously see I've got a lot of gray boxes on here, and my 4-hour chart is getting very, very messy. But that's just the way price action is at the moment. So like I said, we initially mitigated that 4-hour extreme supply zone. Okay, then this 4-hour supply here essentially caused that 4-hour bearish chuck. Okay, so then we came down into these sell to buy wicks demand just to push price back up into that supply zone, which we then mitigated it, and then we continued down. Right, so supply is in control. We're taking out demand levels. We then come down into this 4-hour demand level here, and then that just pushes us back into our 4-hour supply zone, right? So we're just following that supply chain. All three of these supply zones as well swept liquidity, so they're pretty decent levels. So essentially, what we're looking for is price to pull back into here and then to continue down, right, and take out that weak structural low. Okay, that said, when we did come into this 4-hour demand zone here, we had a 4-hour bullish change of character. So it's a little bit more subtle to see. This is where you have to really pay attention with internal structure. But this candle here obviously failed to break the prior candle's low. So we had an internal pullback. And then this movement here, it just broke the low. Let's see, what's the low on that? 9020, and the low on that is 9006. Okay, so about 1.4 pips, I believe we broke that low by. So when we wicked that low, this then became the internal high. So then obviously price then broke that high. So now we've had a bullish change of character from this demand level, and you can see that this whole time the internal structure has stayed bullish. Okay, so now we're pulling back into that low. So it's going to be interesting to see now, will this internal low hold, and will we continue that internal bullish structure, or are we now going to have a bearish chock? Then the internal structure, the 4-hour internal structure, will have now switched bearish again, and it will be back in line with the overall swing trend. And now we may be then ready to take out that low. Okay, so yeah, that's why kind of the 4-hour is getting a little bit messy. It's kind of getting sandwiched in between all of these zones. because this demand level here had caused a bullish change of character. So when we got that initial pullback into supply and we expected that move, this demand level that caused the bullish chock ended up holding, and we pushed price a bit higher. So now we're starting to see a bit of a demand chain battling against the supply chain, right? And that's why it was getting quite messy, at least from a 4-hour perspective. The other thing as well I pointed out in the pre-New York session analysis was we had that initial reaction from 4-hour supply. Okay, so we expect price to then continue down. However, we can see that it clearly failed to put in that lower low, that lower internal low, and price then broke up and closed above the reaction. So what is that? That is a failed reaction. That is a supply to demand flip. And this level of demand caused that supply reaction to fail, essentially, right? So that's where we're at this current time of recording. So 6 p.m. On Tuesday, the 15th of March, as kind of New York's coming to an end. So it'll be interesting to see now, is this supply to demand flip going to hold? And is the internal structure going to stay bullish, right? Because as long as it doesn't take out this low, then we could continue to see that move, and this supply chain may fail and we may see a higher move. Or what I think is more likely is that we'll continue down. Why do I say more likely? Well, for me, structure is king. The swing trend is bearish. So for me, the path of least resistance is always to target that low. But for now, we're kind of caught between two levels, and it's pretty messy. It's not ideal conditions whatsoever. So yeah, even though that initial reaction to supply did fail, once we got that closure above, and this could be the demand that could hold, it's just probabilities. Like I said in the analysis, right, price can push deeper, especially when you have a large zone like this, right? This is quite a large 4-hour zone. It can just pick more orders up within these wicks, right, within here, and there can be enough supply to then actually overpower demand. Okay, so yes, there is technically a failed reaction here, and this is a supply to demand flip, right? But they don't have 100% strike rate, right? It doesn't mean that just because this is a flip that we're now going to continue up and this supply zone is going to fail. It's just something to bear in mind. It's a bullish confluence. But sometimes it can pick up enough orders, especially when the zone is big, to then continue down. So hopefully that makes sense. But yes, overall, especially if you're new to the style of trading or new to trading in general, this is pretty horrible and confusing price action, at least on the 4-hour chart. But if we jump down to the 15-minute, which kind of is, at least if you trade like me, it's the main time frame for kind of getting our intraday bias. It's a lot clearer because we are trading within a very clear swing range, right, between this swing low and the swing high, as this was the last swing break of structure. Yes, we did initially have that external range liquidity sweep, but we failed to close below the swing low. And then the first few days of the week, we've had that bullish pullback. But what has happened during New York, obviously I'm going to get back to London in a little minute, I'm getting ahead of myself here, but essentially we've had a bit of a complex pullback, eventually mitigated that extreme supply level, right? So now it's job done. Now we're ready to take out that weak low. If the M15 is going to stay bearish, really this level has to hold, and now we're ready to go, okay? But yeah, I'm getting a little bit ahead of myself because that's more than New York price action, and of course we need to talk about London. So coming into London, price was actually around here. Now at that point, it was getting a little bit more messy because we'd swept this high, retraced, swept this low, retraced. But the way I was kind of viewing that is actually we've pulled back up, we've mitigated a decent level of supply and premium, we've then taken that low, and potentially now we're just pulling into this supply level, right, to form a bit of a supply chain. Coming into London, we then had a bearish change of character from this level, okay, because we took out this low, so that being the last internal low, right, we pulled back and then had our bearish chock. Okay, so that then can confirm that this level was likely to hold, which then gave us our supply zone here. So as price pulled back into the supply zone, I took a short on the M1, which had a quick movement down, then allowed me to get to break even, and then we had that unplanned news, which then stopped me out. So yeah, there's not really too much else to add to that, other than the thing I really didn't like about it was the way that this high formed. You see how it kind of came up, and then it just kind of correctively rolled over and pulled back, and then that led to the chock. These can play out, but typically strong highs don't form like that, right? But it leaves kind of just that corrective pullback, building that liquidity to then be taken. Generally how a high forms is more like this, where you essentially usually get a sweep and then you get a strong sort of V-shaped retracement like that, rather than just a movement into it and then a kind of very sort of corrective weak movement and then a drop out, right? Because usually that's then just liquidity to then be swept, right? So that was a bit off-putting, but for me, I was more than happy to take that risk. Once we'd mitigated this extreme supply, we'd had the bearish change of character. Coming to London, I was happy to take a short from within here, but yeah, it just ended up failing. It is what it is. Then we came up to the extreme supply level, during that news, during the end of London, and then that's where we're looking essentially for the shorts, right? This is in theory the highest probability M15 POI within this entire M15 swing range, because it's the extreme supply that needs to hold if this is going to stay bearish. So if you're going to take a risk entry on the M15, this is the place to do it, okay? Obviously you would have not got tagged in on the EQ, but entering on the distal, obviously your stop's going to be quite big, of course. But let's see what we can get to this swing low. You can get just over 6.5R, which is not to be sniffed at by anyone's standards whatsoever. And then if the 4 hour is to take out that low from here, of course that could turn into a 12 to 1, okay? And then that's your funding challenge done, right? So, don't turn your nose up at those trades, okay? If you're looking to kind of, well, for any reason really, this is what I've been saying on the call last night on the Zoom meetup. It's something I'm going to be doing a lot more digging into, but that's a conversation for another day. So anyway, so we came into this level here. Now this is where it was a little bit messy, because obviously we did get there with a lot of momentum. Now the momentum personally doesn't put me off. The more and more you test this and see this momentum, as long as it comes into a decent level, structures on your side, right, you can trade against it. The problem with this, not the problem, but the thing that made it a little bit trickier was that the M15 internal structure was still bullish, because at this point we were trading between this M15 internal high and this was the active internal low, right? So obviously there was no bearish chalk until we took the low here. But that said, swing structure is what's king, not internal structure. So once we pull back to that extreme supply, right, essentially the M15 objective, pulling back to get to here, it's now done. The only reason really why the internal structure switched bullish was to facilitate that pullback to extreme supply. So now, it's all systems go to look for shorts to now take out that low. And this is why, if you follow the beginner trade plan, there is zero mention of M15 chalks in there. And the reason why that is to keep your trading as simple as possible, because in the beginner trade plan, you are only ever trading pro M15 trend, right? And you should be only selling from supply zones in the premium, right? If the trend is bearish, of course. So once price is up here, you don't need to be thinking about where's the M15 chalk or anything like that. You just start looking for your M1 entries, okay? And that's why it's to keep it super simple, and to, over a large sample size of trades, you should be on the right side of the market far more often than not, but also more importantly, with risk to reward on your side, right? Because ultimately you can start to be looking to target those lows. But of course, if you are also strictly following the beginner trade plan, it's also a fixed 5R target, okay? So you're always going to be paying yourself. So that kind of rant there was basically to say the point I want to drive home from here is, once we mitigate extreme supply, it's pro trend, okay? It's all systems go to start looking for those shorts, whatever time frame you use, whether it's M5, M1, M3, whatever, okay? Obviously it's more ideal if price comes in and then we get a nice bearish M15 chalk, but we're not always going to get nice utopian price action like that. So it was more than valid to start to look for shorts within here. Of course, as we come down into this M15 supply to demand flip, especially with the internal structure still being bullish, you can look for longs within here, right? Because there's obviously that potential that we could have broken out higher or even switched bullish, okay? But you have to view them essentially as hedges against the shorts, right? Either taking a quick long and taking heavy partials, especially as we come into supply, right? Because once we mitigated in here, like I'm saying, right, it's so high probability that we're going to go at this point. And this is when you can start to look for entries within here. But yeah, it wasn't the easiest. I'm going to have a quick dive into this with you guys now as we jump down to the M1, because I haven't actually looked at this properly myself, as I wasn't trading New York today. As you guys know, I very rarely trade New York. So in terms of looking for M15 POIs, nothing really was that clear for me until this level here, right? Once we essentially broke, this is a bit tricky, but essentially it's a substructure break of a low, right? Because remember, that's the active internal high and that's the active internal low. So this is where it's a bit more advanced if you're looking at kind of the internal price action of the internal price action within here. Okay, so I don't classify this as a flip because it didn't flip any demand, right? So this is the reaction for this pullback. If we look left, obviously there's no demand here, right? There's not even this range, because this range here is below. So this was not reacting from anything on the M15. So this is not a flip. All that for me is a break of that substructure low. This for me is not demand. It didn't break anything. This is purely just a POI, right, that broke this low here. So you can look for entries within here, but obviously it is a bit more advanced. It is a bit more messy. Longs from here were definitely valid as well, kind of pre-London, although it was before. You can see here it was 11:45 GMT. So if you wait until the London low is over, kind of around midday GMT, then that technically wouldn't be valid. But as I'm saying that, I just realized we're in that tricky situation now where the daylight savings time has shifted in North America, and it hasn't shifted in Europe just yet, not until the end of the month. So I think technically that sort of New York sort of volume should really be picking up around 11 a.m. GMT, but I'm not entirely sure. Obviously sessions are, they're not set times where suddenly boom, right? It's not like the stock market where it just opens. It's kind of a gradual process as kind of commercial volume starts to pick up through those times. Anyway, I'm rambling a little bit here, but yeah, essentially longs were valid from here, but you have to view it as a lot more aggressive. And I tried to make that clear in my pre-New York session markup. Why? Because you're buying in a premium after basically the pullback has done its job now, right? So now once this has happened, this is the move we want to be trying to catch. So yes, longs are valid from here, but you should view them as very, very aggressive. You are taking it, and really it should just be a quick hedge into the short to take that pro trend short. But yeah, even this, it wasn't the easiest of price action to read, and it was pretty messy. Now, once price had this move into here and come into here and come back down, you don't want to be looking at longs from here, right? Really, because obviously this internal supply is starting to hold, it's coming down. This is really a weak low now because it's failed to do its job. It's not a good level to be looking for longs from. And again, then once price actually took out this low, this is where it gets tricky because it failed to close below this low. So then in theory, this high could be viewed as weak. So then the question is, do you want to sell from here, right? And this is where it is a bit tricky to read, in my opinion. I think it's a little bit messy. But this is where then you have to go, okay, overall, keep it simple. What direction do I want to be trading? Short, right? Because I keep saying, look at the bigger picture. What's the biggest thing that's happened? We've mitigated extreme supply. We want to be looking for shorts to take out this low, okay? So it's kind of following, right, that bearish order flow, which is a bit clearer on the lower time frames, right? And that's what you want to keep looking for shorts if you want to kind of get in that move. It's not the best, it's not the cleanest, but hopefully you guys can see, right, that's the direction, that's the way that order flow was going all throughout New York in which you want to be trading. So the only long, in my opinion, that was kind of decent probability if you're going to take it was this one here. After it kind of had that failed move and you can see supply is holding, right, that's when you don't really want to continue to be looking for longs within here, okay? And that's obviously the move we want to go with overall. And if you were just sitting with your hands and you're waiting for that bearish chock and you're waiting for this demand to fail, that is absolutely cool as well, right? Because now, potentially if we hold as well and we come up like this into London tomorrow, that will be a much clearer trade because internal structures aligned, demand has now failed, and that will be a nice, real sort of clearer opportunity, whether it's from here or something like this. Like imagine if we're coming into London now, they're the kind of easier trades that I'll be looking for to try and push down and take out those levels there. So yeah, that's kind of my view on the M15 price action for the day. Not in love with it at all. More than happy with the short that I took here during London. And then yeah, definitely these are the high property areas to be looking for shorts, but it was a little bit trickier to gain an entry, at least from my perspective anyway. But potentially I've missed something clean that you guys might be able to direct my attention to if I have. So quickly talk about the short from London. Did post a markup of this in the Discord, so make sure you take a look at that if you missed it. But essentially we got that bearish M15 change of character here. Okay, so what does that M15 change of character give us? It signifies that potentially that pullback is over and that M15 level is holding, right? So we had that pullback kind of pre-Frankfurt. This is around 6 a.m. And then coming into Frankfurt around 7 a.m. we had another level down, okay? So that essentially gave us this blue box, which was a clean M15 POI to work with. So if I show you and zoom in on the M15 to show you what I'm talking about this buy to sell candle here, okay? So we came into that sort of, I guess you could call it extreme supply zone. We came into demand, we essentially flipped it, we had that bearish change of character, but it was a little messy, right? It went back up and came in, which is, I can get it to go, essentially this M1 movement here, which then swept the liquidity behind these M1 highs. All right, and then we had this movement here. So this is where it became a little bit clearer, in my opinion, coming into kind of the Frankfurt Open, European volume kicking up, where we then had a clean POI to sell from. Okay, so as price is coming into this level, right, this is where I want to short from. The main negative confluence, like I said, was the way that this high formed. I really didn't like it at all. These very often fail, but sometimes they work. So I was happy to take the risk, all else things considered, right? So yeah, so when I'm looking at the M1 entry, where do I want to enter? Well, if I look at all these M1 candles, again, it's pretty messy. But I'm essentially looking for an M1 zone within the blue box, right? So I can have a refined entry for where I'm going to set my limit. This M1 extreme has been mitigated because obviously price came in, mitigated it. Price came down into demand, reacted from demand, mitigated this level here, fell to put in a higher high, so then it pushed down. When it closed below the reaction and we got the bearish chock, then this here was a valid flip. Okay, so you could have shorted here, but this was pre-session. Okay, so 2 pip stop. That would have been a valid entry. It's a flip that swept liquidity. A little bit of a messier one, but it was definitely valid. It was a lot clearer here, in my opinion, when we were looking for the entry, because now we have a clear M15 POI to short from. And yeah, this is the last level really that was unmitigated, because as you can see, this is all the supply chain. It's all mitigated here. So just kind of refine that to the wick of this candle, because it's quite a big M1 candle, and that can get me with a 2 pip stop. So got tagged in, got to break even almost within 2 minutes pretty quickly. It was quite volatile on the sort of Frankfurt Open. So yeah, partials, got to break even, but then with that unplanned news, with my remaining volume, I did get slipped, which is always good fun, but it's just part of the game we're playing with. We cannot forget that there is a major, situation going on with a war, right? So things are very, very volatile at the moment. It's just part and parcel if you're going to trade through these times. So yeah, and then once it blasted up and it came to the extreme M15 POI, I'm super interested in shorting from here. But when you get this kind of price action on the M1, it's a little bit tricky, right? Because if you're waiting for an M1 shock, you would have been waiting for this low here, okay? Because that pullbacks, right? Then we have an up, then we take the low, which means that's the high, right? And then we switch bullish down the M1. So yeah, this is your active internal low at that point, and then that's one straight movement. So of course you can be super strict and go, right, I'm going to wait for that M1 low to go before I look for any shorts, of course, if that high isn't breached. But when you get big volatile ranges like this, you can read between the lines a little bit here, and you don't have to do that. So once price came into this extreme sort of M1 zone here, like for me, this high is weak because it hasn't broken any structure, obviously, when price breaks back. But when you see these big movements, like I said, volatile price action movements, sometimes these can start to hold. So you just have to paint the story a little bit. So once the supply in here held and it was respected, and then that gave us essentially the M1 sort of, I hate the term, but internal chock, whatever you want to call it here. Okay, now you start to see a bit of supply held. We've had a flip and a chock within here. It swept liquidity, so I'll zoom into that a little bit. All right, so price came into demand. It reacted. It swept the liquidity behind that high, right? Because you can see that's a pullback there. It sweeps it, and then we come down. Okay, so there's a sweep behind that high there. All right, so this then would have been a POI. I was interested in potentially as prices coming to New York. Would have liked to have seen a nice little another confirmation entry from that level and something like that. Okay, but we just chopped around. Nothing was really going on, and then we came down into that M15 demand zone. So this is what I was saying. If you were looking for longs, kind of coming into New York, that first initial touch would have been sort of the highest probability one. But again, it's a lot riskier because you're trading long when the M15 has done its job. So I'm going to keep trying to really draw that home. Okay, at that point, longs are not high probability, but there's plenty of risk reward, right? When you've got a big range, right? If you can get in on an M1 entry, up to that next supply zone, you've got almost 20 pips, right? So you can, with a 2 pip stop, get upwards towards 10R in there. So it's up to you. That's worth the risk. Price initially tapped into that M1 level within the M15 level. However, it never gave us an M1 chock, right? Because that was the last high. All of those candles broke the prior candles low. So that was the M1 internal range. It never broke it. Then we take out this low here, which then means our M1 high is there. So then we get the M1 bullish chock, right? So then I would have been looking at that entry here if I was trading for New York, right? And wanted to trade that pullback. Price obviously doesn't come in. It just mitigates the top of the range, right? That would be like an M3 or M4 demand zone, right? That's the sell before the buy, mitigates that demand, and then goes away. So as soon as then it taps into this M15 supply, especially when you see a movement like that, you don't want to be leaving any orders on down here, right? It's failed to kind of do its job and break up higher. So at this point, this becomes a weak low, right? And you don't want to be interested any longer, or at best, at least wait for a confirmation entry from this level, which you see would have saved you from a loss. As soon as price spikes through that low, you don't want to be trading that. And then, in my opinion, this is just where, personally, if I was looking at this, I would I just wouldn't like it. I'd only be focusing on the shorts. At this point, the longs, when it's initially tried to make that move and it's come down, just leave it alone. The shorts are what you want to be doing when we've had that extreme supply mitigated. That's as simple as you want to be keeping it, in my opinion. Now, this short, there is a lot of logic behind this, and it makes sense. Would I have had necessarily, would I have personally put a risk entry on a short? Most likely not. The reason for that is, I know these charts are a little bit messy, but at this point, so what we're looking at is price coming up into this level here. And the reason why I said earlier, right, is because price failed to kind of break a close below here. Technically this high is weak. I mean, it does kind of cause that internal breaker structure, but typically I don't like it when price doesn't close below, as very often these can get run. But this is where you just want to weigh it up of how aggressive you want to be. When we've mitigated that, I'm going to keep saying it. I said this a lot on the call last night as well. When you kind of come up to that extreme supply level, you're almost looking not for an excuse to get in short, but you can be a lot more aggressive and a lot more messier with entries at this point, and you just want to trade that bearish order flow. And you can see, if you look on the M1, right, literally from the moment we mitigate that extreme supply level, look at the swings in price, right? The order flow is pretty much just bearish the whole time, right? You have the movement down, pull back up, the movement down, pull back up, right? Impulsive movement down, corrective pull back up, reason impulsive movement down, right? Pull back up. So you can see we're just forming that series of lower highs, and that's essentially when you're really looking to get in. So yeah, I would have, keep an eye on this, but if you look for that M1 confirmation entry, you don't actually get it. Why? Because all of these candles break the prior candle's high. So actually this is where the M1 choke level is. None of these candles break that high. Okay, so you wouldn't have technically got that M1 entry. Seconds, yes, but M1, no. So the only way you could have gotten is if you had taken a risk entry on this POI, which is valid. It has inducement, etc., etc. It's part of those big swings in price. But yeah, it's just a little bit messy. But yeah, overall, it just comes back to what I'm saying. It's the one lesson you're probably bored of me saying it, but I'm going to keep saying it. But literally, when you have these pro trend moves and it mitigates that extreme level, these are the times where you want to put your foot in the gas and be happy to accept losses and just trade that order flow and get in, because risk to reward is on your side, structures on your side. Every single time frame from the M15 upwards is bearish. It's worth taking losses in here and trying to get in, right? So yeah, that would be the lesson, and not trying to take these lows after kind of longs from here once that kind of initial reaction had clearly failed to do anything. And then yeah, let's have a look to see. So then once we'd actually get the M15 bearish chock here, let's see, you've got a few kind of M15 POIs, couple M15 POIs you're gonna be looking at. Obviously this would have been the most ideal one, kind of following that supply chain here. Probably would have found that to the wick, right? And then you would have had this level here. Right, so you kind of got those two levels could have been looking at. And then that one you would have only caught if you had taken a risk entry. So if you're say like you like this blue box, right, like the M15 POI, and you want to look for an M1 zone within that to set your risk entry within, where can you set it? Well, this has already been mitigated here, right? Cool, so that's been mitigated, but it's got an even clearer mitigation there. Okay, so really if you're following it, this is really the only next candle that makes sense. Okay, clearly led to a break of structure. What I also like about it is if you look at this level here, right, we're reacting from this demand level, it's the extreme of the reaction leg, right? So this being the base of the reaction, that being the pullback, fails to put in that higher high, right? And then supply steps in. So essentially, this is the extreme and mitigated M1 level of that M15 sort of reaction. So that makes a fair bit of sense, and it's swept liquidity. So that's pretty much decent. The only thing it doesn't really have is inducement below it, but that would kind of be an aggressive M1 confirmation entry there. And it just goes back in line with that saying, right? We can be more aggressive when the M15 done its job, and you're just trying to trade that order flow there. So yeah, and then that's sort of pretty aggressively. And at this point, we're coming into what potentially, like I said at the start, could be that that 4H supply to demand flip, right? Because we reacted from supply, initially failed to put in a lower low, and then we closed above the reaction. But overall, it's looking pretty damn bearish when it comes to end this session now. So I would not be looking for any entries within here whatsoever, or really be in any rush to try and trade against this long, because really now all of this should be internal range liquidity that is going to get smashed. So any reactions from here should just be short-term little reactions or pullbacks until we take out that low. So yeah, just focus on the shorts, guys. Focus on those pro trend stuff, especially once that pullback has happened. You kind of really want to be forgetting about longs for the most part. Longs are super low probability now, yeah, in general. So that was kind of my interpretation of the day. Obviously, I wasn't watching New York live, so I don't have the clearest view exactly of how price action developed, but that's the way I interpret it. Wasn't the easiest, in my opinion, to trade. Doesn't have the most textbook of price action. But yeah, the main lesson is once we get that extreme mitigated pro trend, do what you can to try and get in and catch those shorts and see if you can take out those lows. So hope you guys take some value from that, and I'll see you in the next one. Cheers, guys.